Nickel isn't flashy, it's not trending like lithium, and it doesn't grab headlines like gold. But right now, nickel is one of the most strategically important metals in the world, and the market is shifting in a way that could create massive opportunities for those who are paying attention. In today's video, we're going to break down why nickel is quietly powering the green boom, where the real demand is coming from, and how traders are positioning themselves ahead of the next supply squeeze. And while we'll cover the big picture here, the real insider deal structures, sourcing pathways, and SKR backed transactions are only available inside our gated member video at tradeskr.com. Let's start with the demand story. For decades, nickel was primarily used in stainless steel production. But in the past 10 years, its role in the energy transition has exploded. High nickel cathodes are critical for electric vehicle batteries because they allow for higher energy density, longer driving range, and better overall performance. That's why major automakers, from Tesla to Toyota, are fighting to lock in secure nickel supply for the next decade. Global EV adoption is expected to multiply by 5 over the next 7 years, and battery manufacturers are already sounding the alarm on future nickel shortages. According to BloombergNEF, we could see a supply deficit of over 900,000 metric tons by 2030 if current production doesn't ramp up significantly. That's not a small gap, and markets are already pricing in the risk. Now, when people think about trading nickel, they often imagine big exchange plays, LME contracts, futures trading, and speculative positions. And yes, those markets matter, but that's not where the real opportunity is for most professionals in this space. The real edge is in physical deals, sourcing actual nickel products, like wire, directly from producers or verified distributors, and supplying them to high-demand buyers who can't risk delays or quality issues. This is where nickel wire comes into the picture. While nickel cathodes are the starting point, wire is a processed form with a very specific set of buyers: battery manufacturers, aerospace companies, and specialized alloy producers. These buyers are less interested in playing the market and more focused on getting reliable, compliant, high-purity supply delivered on time. Here's where it gets interesting. Nickel wire is not widely traded on open commodity exchanges. A significant portion of the supply is tied up in private contracts, long-term agreements, and closed procurement networks. That means most newcomers never even see the real deals because they're happening behind the scenes in trusted circles. Now, you might be wondering, if the opportunity is there, why doesn't everyone just jump in? The answer is risk. Nickel wire is a high-value, niche product. Without proper verification, compliance documentation, and reliable payment structures, a deal can fall apart fast. Or worse, become a legal nightmare. The most common problems I see are counterfeit materials, mismatched specifications, and sellers who can't actually deliver the promised quantity or purity. For new traders, the temptation is to rush in after spotting what looks like a good price. But professionals know that in nickel, a good deal without verification is just a problem waiting to happen. That's why seasoned traders focus on building supplier relationships slowly, starting with small trial lots and proving performance on both sides before scaling up. Another key factor is compliance. Many high-value nickel deals require extensive documentation, certificates of analysis, export permits, and sometimes even third-party lab verification before payment is released. In certain cases, sellers will only work under secure arrangements like SKR, a safekeeping receipt, to protect both sides of the transaction. And while I won't get into the specifics of how SKR-backed nickel wire deals work here, that's exactly what we cover in detail in our gated insider video on tradeskr.com. The takeaway is this: if you want to position yourself in the nickel trade, you need to think beyond just spotting a buyer and a seller. You need to understand the supply chain from mine to end user, the compliance requirements that govern each step, and the trusted networks where verified deals actually happen. So, what should you be doing right now? First, educate yourself on the nickel supply landscape. Know which countries are leading production, where refining capacity is growing, and which markets are importing the most. Second, start networking with verified suppliers and distributors, the kind of contacts that don't advertise their stock on public platforms. And third, learn the deal structures that professionals use to move products safely, quickly, and profitably. Nickel is not going away. In fact, its role in the global economy is only going to grow as the energy transition accelerates. But like any high-value commodity, the people who succeed are the ones who understand the inside game. If you want to see exactly how nickel wire deals are structured from mines to verified deliveries, and how to position yourself for high-margin opportunities while avoiding the most common traps, watch the full insider breakdown in our gated video at tradeskr.com. That's where we walk through the real supply chain map, the verification process, and the secure transaction structures that are making professionals 8 to 14% margins in a market most traders overlook. Before we wrap up, let's zoom out and look at the macro forces shaping the nickel market, because understanding these trends will help you see why the current moment is so important. First, government policy is starting to play a massive role in where nickel supply flows. The EU, the US, and Japan are all developing critical mineral strategies that include nickel. What this means for traders is that more supply will be redirected toward friendly trade partners, while countries outside those agreements may face higher tariffs or more restrictive export controls. If you're sourcing from the wrong geography, you could see a perfectly good deal collapse simply because export regulations change overnight. Don't get left behind in the nickel rush. Head to tradeskr.com/videos now and watch the full insider breakdown. And then there's market timing. Nickel prices can be volatile, especially when tied to geopolitical events or sudden supply disruptions. The most profitable traders aren't just reacting to price swings, they're anticipating them. This comes from watching not just commodity exchange data, but also tracking mine output reports, refinery maintenance schedules, and even seasonal demand shifts in manufacturing sectors. When you combine these macro forces, policy changes, ESG requirements, logistics challenges, and market timing, you start to see why most nickel wire trades are not handled casually. It's a space where professionalism and preparation are rewarded, and where mistakes are costly. So here's my question for you. Will you be one of the traders who only hears about nickel when it's already too late to act? Or will you position yourself now while the window is still open? Remember, the public market only shows you part of the picture. If you want to see the verified supply chain, the private networks, and the SKR-backed deal structures that make this trade truly profitable, you need to see our insider breakdown. It's all waiting for you inside the gated video at tradeskr.com/videos, where we go step by step from mines to verified delivery and show you exactly how the top players in nickel wire are doing it today. Bars, especially in the EV and aerospace sectors, want to show that their nickel comes from responsibly mined and processed sources. This means suppliers with poor environmental records or weak transparency are being cut out of high-value contracts. If you can source from ESG-compliant producers, you'll have a competitive edge in landing repeat business with top-tier buyers. Third, let's talk logistics. Nickel wire is not like copper or aluminum. You can't just ship it in bulk containers and expect it to arrive in perfect condition. It requires careful packing, moisture control, and often temperature monitoring during transit. Even small lapses can lead to oxidation or contamination, which will kill the value of the shipment. Experienced traders factor in these costs and procedures from the very beginning of the negotiation, so there are no surprises later. Don't get left behind in the nickel rush. Head to tradeskr.com/videos now and watch the full insider breakdown.